The One Big Beautiful Bill Estate Planning Considerations in Washington State, 2025 update. On July 4th, 2025, President Trump signed into law the One Big Beautiful Bill Act, one of the most sweeping tax and spending bills in decades. The headlines have been focused on the politics, the spending, and the budget, but buried inside this bill are massive changes that directly impact your estate planning. And here's the best part. For Washington families and business owners, the changes are overwhelmingly positive if you know how to take advantage of them. So in this video, I'm breaking down exactly what changed, how it affects estate planning here in Washington, and what strategies you can use right now to preserve and grow your legacy. Hi, I'm Jason Gray, an estate planning attorney here in Washington State. Every year, I help families protect what they've built from taxes, lawsuits, and costly court battles. And when I saw the details of the One Big Beautiful Bill, my first thought was, this changes the game. But here's the catch. Laws like this are only opportunities if you act on them. What changed in the law? For decades, the estate tax exemption has been in flux. It rose after 2017, but was scheduled to be cut in half in 2026, exposing many families to new estate tax bills. The One Big Beautiful Bill Act changed that. Starting January 1st, 2026, the federal estate, gift, and generation skipping transfer tax exemptions rise to $15 million per person and $30 million for married couples permanently with future inflation adjustments. That means the federal estate tax will only hit the largest estates, removing a huge source of uncertainty for families planning their legacies. And for business owners, there's more. The bill expands the qualified small business stock exclusion to $15 million, allowing even greater tax savings when selling a qualifying company. For Washington residents, where there are also state estate taxes, these federal changes create a window of opportunity. So how does this affect your estate planning? Let's break it down. First, fewer families will face the federal estate tax. With a $15 million exemption per person, most Washington families will not owe federal estate tax at death. That means you can focus more on how your assets are passed down, not just how they're taxed. But you still have to plan for Washington estate taxes. Second, lifetime gifting strategies are now even more powerful. With a higher gift tax exemption, you can transfer significant wealth during your lifetime without triggering federal gift tax. That can include funding trusts for your children, grandchildren, or charitable causes. Third, business owners stand to benefit in a big way. The expanded QSBS exclusion means that you can shield up to $15 million of gains from federal tax when you sell qualifying small business stock. This creates an extraordinary opportunity for Washington entrepreneurs looking to exit or transition their companies. Finally, this new law gives long-term stability. Instead of planning around a looming 2026 tax cliff, now we have a permanent inflation-adjusted exemption that allows for multi-decade planning with a lot more confidence. So what should you do? Start by updating your estate plan. If your will, trust, or gifting strategies were built around the old exemption amounts, they may now be outdated. Align them with the new law to make sure your plan maximizes the higher exemption. If you own a business, take a hard look at QSBS planning. This may be the best time to structure your company or its sale to qualify for the expanded exclusion. That can mean millions in tax savings. And don't forget the basics. Even if the estate tax risk is gone on the federal side for your family, estate planning is still about more than taxes. Trust can protect assets, ensure privacy, control how wealth is distributed across generations, and help reduce or eliminate your state estate tax bill. Now let's talk about protecting your legacy. With higher exemptions, it might be tempting to relax, but remember, we still have state estate taxes in Washington. Laws can change again, especially with shifting political winds. If your estate is well above the new limits, consider advanced strategies like irrevocable trust or charitable planning to lock in those benefits now. Also, keep your documents current. An outdated plan can create just as much chaos as having no plan at all. Review your estate plan every 3 to 5 years or sooner if your life circumstances change. And most importantly, communicate your wishes to your family. A clear plan isn't just about saving taxes, it's about reducing conflict, stress, and uncertainty for your loved ones. The One Big Beautiful Bill just gave families and business owners in Washington a rare gift: clarity and opportunity in estate planning. But opportunity only matters if you act on it. If you're ready to update your estate plan to take advantage of these new rules and to protect everything you've worked for, click the link below to schedule a consultation. We'll walk you through the changes, update your plan, and make sure your legacy is as strong as it should be. And if you found this video helpful, check out my next one. YouTube thinks it will give you even more tools to protect your wealth and your family's future.